Hi everyone, it's time to start talking about true managerial accounting. Before this, we were dealing with financial accounting and finishing up statement of cash flows and a financial statement analysis. Well, now we're ready to move on to managerial accounting. But before we do that, let's start talking about some of the differences between the two. So financial accounting, typical financial accounting, is really meant for external users, right? People well, we'll get to who uses them in a second. Managerial accounting is meant really for internal users. Okay, so the idea is financial accounting was all about producing those financial statements, but managerial accounting is more about running the business, and that's really where we're going to be focused. What does it cost to make a product? What cost do we include in making a product? What should we price it at? What is our break-even point? Things like that. So it's really about the internals of the business, whereas financial accounting was about recording transactions properly in accordance with GAAP and then producing a set of financial statements out for the world. Managerial accounting is more about running your business. So just kind of a quick, who uses these things, right? So, all right, sorry, I got distracted there. Who uses financial statements, right? Investors use financial statements, creditors use financial statements, auditors use financial statements. Oops, can't spell. The IRS, the government, right? They certainly use financial statements because they want their piece of the pie too. Management does use financial statements. Wow, my fingers must be off on the keys. Management also uses the financial statements, but they're really more focused on managerial accounting, but they are interested, of course, in what the company puts out there to the world, right? So there's going to be a bunch of people. One more that's kind of important to mention: competitors, right? They're certainly looking to see how their competition is doing, right? But all they really have sight to is those financial statements and the reports that get attached to the financial statements and so on. Managerial accounting, though, different animal entirely. The only people using it is management and internal employees, right? The idea with managerial accounting is you're looking at things like, how do we pay people? What do we pay people? What does it cost us to make a product? How much does materials cost us every year? What was the cost of manufacturing our products? Right? These are things that don't go out there to the world. They're things that stay internal. So if that's the case, the only people seeing them are the people that are actually working for the company. Financial statements are the reports that get put out, right? If you are focused on financial accounting, financial statements, right? You've got your income statement, you've got your statement of retained earnings or statement of stockholders' equity, whatever you want to call it. You've got your balance sheet, you've got your statement of cash flows, right? So you've got your four major financial statements. That's what goes out there to the world. But in managerial accounting, there are no set of statements. The statements that they're putting out there to the world are whatever it needs to be to run your business. So there's no specific required reports. There's some standards, like we'll get into the cost of goods manufactured report and things like that, but there's no standards. It's just going to be what you need. If you need a report on payroll, you get a report on payroll. If you need a report on materials, you get a report on materials. Okay? Now, if you're focused on financial accounting, I know I'm flipping back and forth between these two. If you're focused on financial accounting, the professional certification you would get would be a CPA if you're an accountant focused on financial accounting. That stands for Certified Public Accountant, of which I am. And you're focused on serving the public's interest and the public's needs, right? By making sure the financial statements are being reported in accordance with GAAP and all of that kind of good stuff. That'd be the professional certification you would get if you were looking to be an accountant. That's kind of your gold standard. Now you can be an accountant without the CPA designation, but I gotta tell you, that doesn't look great. For example, if I was hiring somebody and if I was hiring an accountant and I had a choice between somebody who was a CPA and somebody who was not a CPA, I would absolutely hire the CPA. It's just a lot harder to get a higher level job as an accountant. Doesn't mean it's impossible. I'm just saying that CPA exam, if you're an accounting student, that should be in your future. Okay. Professional certification if you are a managerial accountant. There actually is something. It's called a CMA, which stands for Certified, guess what the M's for? Managerial Accountant. right? All right, so I'm just going to put it out there. The test is not as significant as the CPA exam, and that sounds terrible, but the CPA exam covers lots of things, from tax to government to audit to financial accounting, right? It's like it touches on everything. CMA is about managerial accounting exclusively. And that's fine. If you graduate and you have the accounting degree and you have no desire to go the CPA route and you want to go work internally at a company, CMA is something you can get because you're dealing with the internal management of a company. So it's not like a CPA is the be-all end-all, but it definitely is your gold standard. A CMA is good if you don't plan on going the CPA route, you don't plan on auditing, you don't really plan on having a tax firm on the side or something, working for a tax firm on the side. If you plan on staying internal, get a CMA. All right. So let's put that out there. So I left my notes in here. All right, that's kind of it. That's our conversation on financial versus managerial. From this point forward, for the most part, we're focusing on managerial. We're focusing on internal reports, internal practices, and so on. We're kind of leaving financial accounting in the dust. However, that doesn't mean journal entries go away. Journal entries are forever. Journal entries are financial accounting, right? Journal entries are just part of accounting, financial and managerial. So we're not going to hit you so much with the debits and credits, but they're definitely going to be included. All right, so the management process, and this is straight from your text, but let's just talk about these things. The idea is this is about managerial accounting. It's about managing your business, so there's a process here. The first set of the process is going to be about developing goals and objectives, right? Because if you're running a business, you're not just running it willy-nilly. You have a plan. You have goals you want to achieve. You plan those objectives and you set them for yourselves, right? Maybe it's increasing sales by 5%. Maybe it's decreasing costs by 3%. Whatever it is. Directing is about running those day-to-day operations, right? So you set the plan for yourself, and then directing is running the day-to-day operations in order to then meet those objectives. Controlling is monitoring. So at some point you have to step back and be like, okay, I'm running my day-to-day operations, but am I in line with potentially meeting my goals? So there's something that's very common that accountants do, is something called a budget to actual report. And the idea is, what did you budget for and what actually happened? So at that point, you're monitoring the results. Improving. That's a continuous thing, right? Improving, you're constantly improving the process. And maybe you're not on track to meet your goals and you see, maybe your materials are costing more than you expect them to. You might improve the purchases, or maybe you start bringing it in-house and you obtain your own materials. Whatever the case may be, the idea is every part of this should have an improving piece. And decision-making, also involved in all of the above steps. The thing is you want your management in your business to be somewhat empowered to make decisions. Because if you don't, and you don't let management make the decisions, and the decisions are only made at the topmost level, that is not going to be good for the reaction time of your business, right? Managers are like on the ground, right above the work, making sure that things are getting done properly. Somebody at like a higher level, like a CEO or a CFO, they're only seeing really top level stuff. They're not seeing the nitty gritty that's going on. So you have to give your management the power to make decisions up to a point, right? You don't want them doing something awful, but hopefully even at the higher levels they're then monitoring the management levels, but they should have some sort of power. Okay, so something I do in class is we're going to move on to this. Something I do in class is we kind of do an example, and something about me is that I am a big fan of junk food. I love it. It doesn't mean I eat it all the time though, unfortunately, right? But I can't do that anymore. But one of the things I love the most is donuts. All right, so I'm going to put donuts in here. We're going to talk about some of the items in manufacturing and how they relate, how the different costs, the product costs, are treated. Okay, so this is something that we really are going to be hearing about pretty much the rest of the semester, is the things that we're going to be touching on or hitting at a high level today. So the three types of product costs you're going to have are going to be, I wish I had a different ink color. Let's see if I can figure that out quickly. No, I'm seeing highlighter. Let's see. Ah, well, so be it. We will stick with black ink. Oh, look at that. Well, there you go. Oh, I still have no choice. Okay, well then, maybe I'll figure that out in another video. So the three types of product costs. Direct materials. What if I get underlined? If it'll let me do that. And it will not. All right, so be it. I guess my options are limited. The 3 types of product costs are going to be direct materials, direct labor, and something called factory overhead. You know what? I'm at a 10-minute mark, so before I start getting into this at any level of detail, I'm going to stop. We'll start video number 2.